I'm going to show you all how to put together a trade strategy. It's pretty simple, but this is something that I just wanted to showcase for anybody that's still a little bit curious on properly developing a trading playbook that they can consistently execute upon. So let's get into it. Two tools we're going to be using for this. One, TradingView right here, and then the second being TradeZella, specifically the playbook tab. If you do not have TradeZella, it is completely okay. You don't need TradeZella. You could put it in notes, you could put it wherever. I personally prefer a trading journal that does showcase backed analytics. I'm not sponsored by TradeZella. Please, TradeZella, make me an affiliate. But nonetheless, I still vouch for TradeZella. There's EdgeWonk, Edge, Edge Max. Sorry, there's Edge, there's Edging. I mean EdgeWonk. You can go use, and there's a million different other trade journals for free. But me personally, I do use TradeZella. Use whatever journal of choice. This was a setup today that's showcased on the charts. Today is a quote unquote bank holiday. It is Columbus Day. Columbus Day is not a bank holiday, funny enough for anybody curious, because there is always volatility during Columbus Day. On NQ, looking for shorts to the downside, seen price action rally at market open, then showcased a micro time frame market structure shift to the downside. And that was when we looked for a potential sell entry. However, with looking for the sell entry, our typical trading model is executing waiting for an imbalance. So if I showcased it, it would look something like this. Bam, 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 form an imbalance within here, come up, retrace, and then push back to the downside. However, with this setup, we did not have that. Instead, we had an inverse fair value gap. For anybody that does not know, I recently did record a video on me fully dissecting my current trade strategy and making an improvement live on camera. I just have not uploaded it, and in turn, you guys are getting this instead. So this is the video you guys are getting. But I did do that, and I recently implemented inverse fair value gaps and strong displacement, showcasing proper confluence before we go in and execute. Those two things have revolutionized my trading. All from simply going in and taking a nap. If you need ideas, take a nap. I promise it works. Well, we see price action push down, showcasing the market structure shift, retrace not only for this 1 minute inverse fair value gap, but this 5 minute bearish fair value gap pushing price to the downside. Did we see this? Yes, we did. However, within this 5 minute imbalance, 5 minute fair value gap, I wanted to see any 1 minute fair value gap get filled, not the inverse, because like I said before, I had not fully gotten used to executing on the inverse. Today was a perfect example on how to go and actually develop your own playbook, and this is going to be another strategy that I'm able to execute on within price action, all because I sat there and waited. During times, it is good to go in and execute. However, I was not fully sure of the setup, so now we're making a video about it, which I think is more beneficial than having gone in and executed upon it. Now that we've explained the trade and why we were looking to execute upon this setup, let's go into TradeZella and make the playbook. So when you do first open TradeZella, this is how your dashboard will look. You have your account balance, net P&L, trade win, profit factor, day win. You can customize it to whatever you like. However, this is not a TradeZella tutorial, instead a trade strategy tutorial in putting everything together. If you want to go find a trade strategy, look online. There's countless of strategies you can go out there. All of them work as long as you're able to understand your own price action and how you execute. Remember, your strategy should be personalized to you. If you're on TradeZella, cool, follow along. And if you're not, write it down on pen and paper or put it in your notes journal. When you open TradeZella, go down 4 tabs. 1, 2, 3, 4 to playbook right here. You can see we have 3 playbooks. We have the after hours playbook, we have our intraday execution, and we have okay. And we have Diddy's playbook. For this example, we're going to be deleting Diddy's playbook. So now that we have unfortunately deleted Diddy's playbook, we can go in, click create playbook right here. So now that we have unfortunately deleted Diddy's playbook, we can go in and create a new playbook right up here in the top right corner. This is just general information. You can put whatever you want to do. We will call this our scalping playbook. Note, you can name this whatever you want, put any description. Free Diddy. He ain't do none. And so now going into the most important part, the trading playbook. When you first sign into TradeZilla, you will have a standard 3 groups. If you don't know what to include within your group criteria, don't worry. Hopefully this video can help give you an understanding or spark some idea of what you can go and include on your own, or you could simply take all of what I'm about to showcase. Standard, it comes with 3. We are going to include 2 more, maybe 1 more. So that would be 3. Wow, math. Oh my gosh, math. I failed math. Yeah, I wasn't even close to passing. Oh my gosh, I think I had like 2%. An F is 30%, or anything below 60. Sorry, an F is 60%. I had 2. What the heck? I had 2%. Oh my gosh. We're not making it out of high school. We gotta make it with this trading. Anyways, going into market conditions, we're going to include 3 market conditions. Note, these market conditions are necessary in order for us to even have the idea of thinking we will trade this day. Let's include, bam, we need to have a daily bias. We must have clean price action. And last but not least, we need to have an intraday draw liquidity for a target. Now, you can organize these how you please. Let's say you want clean price action first, daily bias, and intraday draw liquidity. That's completely fine, right? Next, going into entry criteria. The entry criteria is what helps you begin to develop an understanding for a trade idea. This is your trade idea, not your trade execution. That's a spoiler to the one we're about to include. Entry criteria. What are we looking for before even having the trade idea? 1, we're looking for an overall liquidity sweep. And then strong displacement or volume, and a market structure shift. These are the next 3 things that we are looking for before even having the potential in order to execute. And note, the more you go through this and the more you execute upon it, it will become subconscious. You may for the first time have to analyze right before, and that's fine. After a few trades, after a few losers and winners, guess what? It'll become subconscious. You'll know what you're looking for. And then, I want to emphasize this, your P&L, yes, it does showcase whether or not you're progressing, but your playbook is truly what showcases that. If you're actually executing on your playbook day in and day out and following your rules, guess what? You're in the green. That to me is more green than somebody who has a major P&L of however much, right? Or a huge prop firm payout. How well are you able to follow your playbook and remain consistent? Because if you can't keep the consistency, nothing of what you're doing matters. So these are the 3 entry criteria we are looking for. Let's start off with overall liquidity sweep. Yeah, this is actually perfect. Strong displacement or volume, the market structure shift. Now, we're going to create another one, which is going to be our execution criteria. Bam. What we are looking to execute upon in order to take our trade. It's that simple. 1, we are looking for a micro time frame inverse fair value gap. And the next thing we're looking for, and if we're curious, we can go in and check. We have our micro time frame inverse fair value gap. We already had our strong displacement prior. And we are looking for a validating stop loss. Let's say validating stop loss. And last but not least, let's say, validating risk reward. So an overall risk reward of above 1 to 2. Risk to reward above 1 to 2 R. One to 2.5 R. Emphasizing the 2.5 because our average risk reward is 1 to 2.76 in that area. So say above 1 to 2.5 R. We don't want to decrease our risk reward. We want to increase our risk reward. That doesn't mean over target though. Now, this is our execution criteria. You may be like, Lonnie, it's pretty simple. Guess what? The reason why it looks so simple is because you've already done all the other work here. Some of you may say this is over excessive, but the real reality is you already do this subconsciously. You already check market structure, you already check price action, you already get your daily bias, you already get your draws and liquidity. All you're doing is tracking your data further. That's all you're doing. That really is. You already execute, however you execute, you're just putting it down so you can see what works and what doesn't. Because now that it's actually data driven, you can go in and analyze, okay, is this working and is this not? Because if this isn't, and this is the thing that is hindering me from growing within my trading, guess what? I'm going to cut it out, or I'm going to include something that allows me to benefit. And that's when I included the displacement or volume. That is, it was as simple as that. These two things right here revolutionized my trading forever. And it was that simple. So that's why the execution criteria looks so easy now, or simple, or clean, because it's not much. Because all it is your stop loss, risk reward, and what you're actually going to execute upon. Because all the other work was done here. Your liquidity sweep, your displacement to the downside or to the upside, and your market structure shift. That displacement counts as your market structure shift. That's it. Or you can even put these together. I'll probably put them together. Strong displacement and market structure shift. And now, everybody talks about exit criteria, which we are going to get to, but the last thing I want to include before exit criteria is risk factor. So I accidentally deleted everything by changing tabs or backspacing or something. Anyways, I have to redo this risk factor segment. Risk factor is divided into 3 simple things. You may see that marking conditions, entry criteria, execution look a little bit different. Basically just concised everything down into one, made it simple. But now here, risk factor, there's only 3. There's aggressive risk, managed risk, and there is passive risk. Your risk tolerance is, based upon you. It's based upon what you find aggressive, managed, and passive. For me, passive is when I divide my risk into 2. I trade 0.5 on the day instead of my typical 1% risk. Managed is 1 trade that day, just risking 1%. Aggressive is 1.5 or more, maybe 2, or 1.25, or, whatever you consider these risk factors is what you consider your risk tolerance. Make sense? Makes sense. Should make sense. Pretty simple to understand. I hope so. And if not, you're probably a goofy goober. But getting into the final exit criteria. How do you exit your trade? It's pretty simple. Target draw on liquidity. That's it. And then you can also include target draw on liquidity. You could throw these 2 in, which I like to do. Take profit. Then you can also throw in break even. And then you can throw in stop loss. Better yet, I'm actually going to go in right now and put together target draw on liquidity and take profit. So there you go. This is our full playbook right here. This is what I will be executing on. There's not really any changes I need to make because I made the changes I needed to make. So what are our market conditions? Clean price action, daily bias. We need to have these 2 things before we even look toward the entry criteria. Upon our entry criteria, This is developing our trade idea. Now we're looking for an overall liquidity sweep and strong volume with the market structure shift. Note this overall liquidity sweep is on any time frame, even the micro time frame. If price action like today was rallying to the upside, thanks for doxing me. If price action is rallying to the upside, right? And in turn doesn't showcase our macro time frame liquidity sweep, then that's completely fine because we can scale down in time frame and see, okay, well, liquidity sweep wasn't on the 15-minute or the hourly, but we did have one with the strong market structure shift on the 1-minute time frame. That right there is valid in order for us to execute, right? Showcasing the strong displacement, whatever you want to call it, market structure shift. Execution criteria, validating stop loss, macro time frame inverse for value gap, because remember, this is a strategy based upon our inverse for value gap trade entries. We could throw in other confluences if we want with the 5-minute, but it's mainly the main premise is the inverse. And the validating risk reward. Now our exit criteria: take profit, draw on liquidity, break even, adjusted stops or stop loss, which will always be and should always be, unless it is a scaled in trade position or an adjusted trade position above a high or a low. Now our risk factor: aggressive, managed, and passive. And then there you go. That is our trading playbook. It really is as simple as that. You can go in and put any trades you would like into there. And now you have your own personal trading playbook. If we go on TradeZilla, I'll showcase to you guys how you can include this into anything. So if we go to this loss right here, go to playbook, add my scalping, intraday and after hours. For this one, we'll use our brand new scalping playbook. Did we have clean price action? This isn't our exact entry. I don't know why it's messed up. But did we have clean price action? Say yes. Daily bias, yes. Did we have an overall liquidity sweep? Let's say yes. How about our strong displacement with market structure shift? No. How about validating stop loss? Say no. Macro time frame inverse? No. Did we have a validating risk reward target? Yes. Did we hit our stop loss? Yes. And was our risk passive, managed, or aggressive? It was passive. So there you go. Now, if you go to playbook, bam, right here, you can see all the data on what works, what doesn't. You can see your follow through rate, which is your win rate, your missed trades, backtesting sessions, notes if you want to put about the playbook too, anything of the sort. But there you go. And there you have it. Creating and developing and putting together a trading playbook really is that simple. Find what works for you. It does take time, but once you do, I urge you, emphasize on properly taking journaling seriously, create your own trading playbook and execute upon it. Track your data and see what works and what doesn't, because that's the only way to improve. If you're eyeballing it and guessing on your data, guess what? That means you're guessing on your trading. And if trading's not that serious to you, then that's fine. You don't need to take it as serious. You could be just like the 90% that never make anything in this industry. Or you could be like the 10% that never quit, never give up, and never fail to put in the proper action. And be part of that 10% that truly do make something out of this game that many people don't and many people won't. So, I hope you were able to learn anything besides Diddy's oiled up freak offs party. I mean, it was a good party though. Not like I was there. I wasn't there, obviously. Thing is, I don't remember much after he gave me that drink. Yeah, after Diddy gave me that drink, all I remember is really waking up in a bedroom. I was missing a bunch of my clothes. Actually, I had no clothes. I didn't even have the clothes I had on when I walked into the party. And I was a little sore in my under area. You know, below the belt. Come to think of it. Am I a victim?